Hello everyone. Good afternoon and welcome to the monthly market outlook for December 2017. Today is Monday, December 4th, 2017. And it's good to see you all today. Just been flipping through a few charts here. Also taking a look at Bitcoin. We're going to take a look at some higher time frame thoughts on some futures contracts. We're going to look at some stocks. We'll talk some Bitcoin, and any suggestions that you have, feel free to please type those in to the search box or into the chat box, and I'll be able to see it and be sure to take a look for you. If you don't know who I am, my name is Frank Ochoa, also known as PivotBoss. If you come over here to PivotBoss.com. This is our members area here, but if you go over here to PivotBoss, it'll pop up the site, PivotBoss.com. Basically, I've been trading for almost 20 years now. It'll be 20 years next summer. I've been fortunate enough to be a part of some fantastic trading teams, both in a proprietary sense and in other ways. And right now is a great time to be in the markets. The volatility has picked up on an intraday basis, and it's been a great time overall because the structure has been known for some time. And so, for those of you that know, last week we had a Cyber Monday deal that was running through the end of the month, November 30th, which was last Thursday, but our website crashed at that time. First time in 8 years that's happened, and it was quite an ordeal, but we got everything back, everything up and running, and now we got the deals back for you. So if you wanted to take advantage of some of our Pivot Boss training, including my book Secrets of a Pivot Boss, or any other training, including Swing Trade Pro, it's all here at a great discount. So you can take a look at that later on. Here, let's go ahead and jump into some charts. I usually like to start with the futures first, and right here CL is being requested, so let's go ahead and start with crude oil. Okay, so crude oil, you'll notice a lot of lines here, and I'm usually someone who likes to have a cleaner chart than not, and when you start to see lots of lines on my chart, that's probably a good indication that crude, or that instrument has been in a range. Because as it trades over and over in that range, you'll see, many key levels emerge within the range throughout, especially a range as wide as this one. What we talked about in our last monthly market outlook is that the next key zone or price distribution is going to be from 55 to 62. And so we kept talking, can price finally get above 55s? Because we talked about last time, these are the major distributions. You got a price distribution from 62 to 55, you got one from 40 to 55, and then you got the one down here from 26 to 40 basically. And then the market has spent most of its time in the 40 to 55 range. Only a small percentage of the time below it, only a small percentage of the time above it. And it's made for a very nice bell-shaped type of profile down here. And right now, with how strong the market pushed through 55s, we knew that a retest back to 55 or as low as 54.85 was going to be an opportunity for bulls to defend. The reason we knew that was this right here, 54.85, was the previous month's high. You got a breakout and ran through 55s even, and then it came back to that zone and formed what I call an extreme reversal pattern. The extreme reversal I talked about in my book Secrets of a Pivot Boss. This is in chapter 2 of the book. It's my favorite setup, especially when you have the right structure in a market. So an uptrending structure, for example, when you have a major oversold condition. This range is usually 150 or 200, sometimes 300% of average range. When you see that day happen in the framework of an uptrend, and then price holds the next day, that's a digestion day. That's a very high probability setup that usually leads to a slingshot move in the opposite direction. And you can see it in market after market. You can see it in this market alone. It happened here, it happened here, it happened here. So it's been happening this entire time. Again, this was another great one. 55, again, is the key level. And in defending that level, I've mentioned to our traders in the trading room that I do believe that 60 to 62 is still above. I still think that that target zone has yet to be reached and will likely be reached as long as 55 continues to remain as a floor. Now, there is a shot that we come down here and try to retake out those lows, but I still think bulls would come in and defend. Because whenever you make a transition from one price distribution, like this 40 to 55, and you start to transition into the next one, a strong early push followed by an early defense makes for all the makings of price finding acceptance above 55 now, and so that's the level to defend for bulls until proven otherwise. Obviously, I don't think we get that low. We've been very, very bullish. But in the last few days, we've definitely seen a hesitation for crude to push higher. So the key level that I'm watching here is going to be 56.25 and the 56.50. And that's basically the previous month's midpoint. And 56.25 right here is a key level based off of an impulse range. And that also puts you right inside the trigger zone. The trigger zone is the space between the fast and medium moving averages, pivot-based EMAs that I have here. In a bullish trending structure, when price comes into the zone and there's rejection, you typically see a pretty good buying opportunity every time it comes in there. Very close here and a buying op. So if we were to dip down a little bit lower into this zone, I think it could be a great opportunity to look to defend, and perhaps that could bring 60 to 62. That could be ahead. That's a 6 right there. So that could be the next foot ahead. If it fails here, then it's probably going to gun for this low, at which point it could still be a squeeze opportunity off that area. So right now I'm fairly bullish crude. I've mentioned before that crude has been pretty fantastic. We've known when to kind of back off. We've known when to kind of step on the gas. We've known all the key levels. I mean, we knew that this was probably going to be a buy opportunity. We knew this was going to be a defense back to here and likely here. We knew if price could get above 55s, we'd likely start to move towards 62. So this one has behaved very well according to typical market structure, and I think that there could be more upside ahead. It just depends on how this next pullback is going to be dealt with. Is it going to be here off 56, 56.25, or is it going to be a little lower upon a larger retest? Well, that's yet to be seen here, but it's definitely having trouble right now short term. So maybe another shakeout leg down could bring out another buy up. So this one's looking pretty good. I wanted to take a look at the NQ next. Here's the NQ. One thing you know from me, especially from my book Secrets, is that in a trending structure, in a bullish trending structure, when price is going up, in this case, this pivot range is very, very important. It can be very important. It's like a roadmap. It's like turning your headlights on at night so you can see the road. It gives you a framework to know where to defend, know where bulls will be looking, know where bears will be looking. But for the most part, if you're trending up, the market takes the staircase on the way up, right? So that means every time it pulls back to the zone, you should be looking to buy. Here it got a little messy, but there was a trap and go. Then it needed a bigger trap and go. Here it held and bounced. Here it held and bounced. Here, a little bit early and bounced. Here it held and bounced. So that's what you're looking for. You're looking for signs that that structure is going to remain intact, but you're also looking for signs that perhaps that structure is breaking down. And one of the scans that we like to run, especially for those that are in PivotBoss Masters, is the higher value with a change of bias. That means that you have a higher value relationship. So this is the pivot range, and this month, December, has a pivot range here. That's higher value. And so from there, we should be looking for bulls to defend and rotate higher. But you can see here the close was barely above the top of the pivot range. And today, in the NQ, what we noticed in the trading room early in the day was that price was failing to hold above 2-day highs. Failing to hold above 2-day highs. And so if you draw a line right here beneath these 3-day lows, you get 63.90. 63.90. And so price came up, hit that level, and then pulled back and started to drop below 2-day highs. And right there in the trading room, we said, you know what, that right there is pretty bearish, and we'd likely come back at least to the midpoint of the day. And it got there pretty quickly, got just in front of it, and then finally finished it and came through and took out these lows. But one thing we talked about in the trading room this morning, I did not get a chance to put out a pre-market report, but this is the first thing we mentioned in the NQ, was the FOMC key level from November 1st is still firmly intact. We know that bulls are defending there. A lot of trading is all about who is positioned where. Who is positioned where? Are they getting paid? Where are their stops? Those types of things. And it's clear that since this FOMC day, that level has been bid multiple times. It was bid Friday. Today, failed to hold above 2-day highs, rejected off prior support turn resistance, and is now, on the verge of potentially running stops below those lows to some degree. And that's going to be important to watch here. So that 63.90 worked out much faster than I anticipated here, but we were on top of it this morning when it failed to hold that high, back to the mid, and then continued onward. Look at this, 62.52 right here. So this is a very important level. We know bulls have been defending here and here and here and now there. So they have stops below. This LVN is very important here in an uptrending market. If price were to drop down below the previous month's low here and find rejection in the LVN, that could be enough to come back up and take out the high. That would take us into 64.50. It would be just above these highs. Remember, the markets like to trade in an expanding range type of form. But, I know a lot of folks always ask how, bearish are things and how far will the dip go? And my answer is always pretty standard with that. It's we have to trust the trend and the current structure until proven otherwise. And right now, this thing continues to be very bullish. I would still say that pullbacks are buying opportunities. And we could drop as low here as 61.50 or so, whatever that zone is right about here in that LVN, and still be a buy back towards 64.50. So I still believe this is an uptrending structure overall. We still could see more downside, however. But should we start to see rejection below that previous month's low, that could be a great zone to trap. The previous month's range wasn't that wide. Wasn't super wide. So, look, if you look here, that's the previous month's high. That's the previous month's low. And in the first couple of trading days here, we've rejected prices above the previous close, which means we're likely gunning for this level. And then once we get there, if late shorts get trapped below that level, then you likely go back to this level right there. And then you likely go even back to the opposite edge of the range. That's going to be here. So I think that's going to be the trade to watch for early this month here. If price drops into the LVN, it could be a great trap play. And if you go from extreme to extreme, say 61.50 to 64.50, that could be a plus 300 there. So that's going to be one to watch out for. Any failure to hold 61.50 could be a major break in trend structure. Again, this market has been super buoyant. Let's look at one that we haven't looked at in a while. We're continuing to watch more and more. That's RTY. We've been watching this one more and more in the trading room here. One thing you notice is there's a great impulse range here that was given to us right away in when this one came back to CME. Big nice drop, bounced back to the mid. That gave us our key ranges, or key range to watch with the key levels. When we got a massive break here and pushed right beyond 50% and held, we knew right away that a push back to the top of this key range and into the LVN would be a buy. So we knew 1450 to 1460 would be a great buy. That would get us back to value and then would get us to a new high. And so right here was the end of that move. It happened in about 4 days, 5 days. From there, it pushed up one more leg, and right about here in our room, we're talking, you know what, 1555 may be the short-term high. And from there, you may see a pullback to value. And that happened very quickly. I mean, that's Thursday right there. Friday, with the news that came out and hit, it led to a flash sell-off, and it got that target very quickly. So very difficult to trade. That was supposed to be a 2-3 day swing trade, and it happened in a flash in the afternoon. But today, we saw again that prices were being rejected above the prior high. So that's the previous month's high. That's the 100% target. So from this key range here to here, that's your midpoint. If you take the range distance from that point to this point and you project it 100% higher, you get that level right there. And so it hit that target. We got it. And it's responded to every single one of these levels as you would hope it would. I mean, it's been fantastic. So if you're a trader of the Russell 2000, this is the impulse range that we're using right now on a long-term basis. And you'll notice right here that we just put one up today, and it appears that we reached that target that we set out this morning. So if we drop this down, say, to the hourly chart, let's go down to hourly here. So if you look at this in the hourly chart, here's the low, 1494.80. Big rally, and then hit that big spike high at 1562. So when we hit that high a little earlier today, I mentioned that we're likely going to come back to this midpoint. That's 1528.40 to seal that key range. And now that's going to be the near-term key range to watch for trading behavior moving forward, at least over the next week. I mean, that's a pretty sizable range. Basically 95 to 62. That's 65, 70 handles. That's a pretty sizable range, which means whenever we do get expansion from this range, we're going to have reliable targets that we can trade off of in the future. So those expansion targets, the 50%, the 100%. So right here, based off of a breakout from this range, that would be your target. That's 1629. Right now we're trading 1530. That's a 100% or 100-point move from there and this midpoint. I don't know if this is the buy just yet. Instead, we have the key range, and it could continue to develop, and then eventually we could see this thing play out. That's just from the midpoint, because oftentimes what you see is when you get a key range like this, if price drops below that key range low, a trap could develop below here, call that 1490, and from there you could squeeze 1490 to 1630, and again you've increased the profit potential there by being patient and waiting for the great trap areas. So this one has a great range here to watch moving forward. On a long-term basis, already hit the major targets, but short-term offering another range here to watch. Here's gold. I won't spend a whole lot of time on gold. But gold here, this is the 1 hour chart. Today was a very, very tightly coiled day, right around 5-day value. Not a whole lot to say about gold today, but tomorrow could be big. And that's what I told the traders in the room today. Tomorrow could be big. Come on, let's go. Let's change this up to the daily. The reason why is today had a narrow range day, 50% of average to be exact. It had a 7-point range to begin the day. It stayed inside range all day long. And then, it's only been averaging 14.2 points per day on a 10-day average range basis. And today to trade 7 points, that's half of ADR. When you trade half of ADR, that's really tightly coiled compared to what you used to see, which means that after a tightly coiled day like this, you tend to see a high range day next, one way or another. So tomorrow could be a high range day. And if it's 125% of ADR, that would be 31 points? No, sorry, that's a 5-day range. Let's drop that down. It would be more like 17 or so. Let's bring this down to a 1-day. So what I'm looking at right here, this is a 1-day ADR. This was very tightly coiled. Anytime you're below 65% of 10-day ADR, it turns magenta. And so when you see a low range day like this, right, you see a high range day the next day. And the next day could be 125% of ADR. That's the top red dot. And you can see it almost hit there, right? And so right now, 125% of ADR would be, what's that top one? 16 and 16.2 points, basically. 16.2. So tomorrow's range could be about 16 handles. If we break above 1280, there could be a home run move back toward, excuse me, at least 1290 to 92, followed by the opportunity to come out and take out recent highs. So right now, I really like the low range day. To me, that suggests that we're compressed and we could be looking at expansion, big expansion soon. That could be a 1 to 2 day move. And if it's to the upside, 1280 is going to be a great level to watch. It's been a key level for a while now. And that could easily lead to a retest of recent highs. But I would shoot for 1290 to 92 on a first test basis and then look to take it higher. So that's the idea there with gold. Now, when you have compression, you don't really have a clear directional bias. Just because it's compressed doesn't tell you bias. But based on higher lows that we've seen and higher highs, everything tends to suggest a squeeze. But there is the potential that it breaks downward. So if it were to break below 1273s and it fails to reestablish back above 73s, you're at least going to take out these recent lows at 63. So we could be doing that. And if that happens, that would be another opportunity to look for a trap below the previous month's low, and that could be below the previous key range low, and that could all lead to a move back to 85s. So those are two key trades there that I'll be watching and that we talked about in our trading room today. Gold drops below the previous month's low and the key range low. It could be a great trap opportunity here, back up. And if we start to push through 1280 half, I think we come up here and take out this high. At which time, I think it'd be another fade right back to 1280.5. So that's my gold strategy moving forward. Yeah, let's take a look. USLV. So we were looking at silver. Is this a silver, right? We were looking at silver, the future. And I'll show you some of what we were thinking based off the actual underlying. This is your key range right there. That's your key range. So if you're familiar with the key range analysis that we talk about, basically you take the highest high after a sharp move. It has to be a sharp reversal and it has to sell off hard until it finds a sharp rejection, and then it has to bounce back to the midpoint. And when you have that, you have yourself a key range. And these boundaries are very important. And at the moment, we're below the key range low. And that's important because now it's a decision point for the market. It either needs to, continue lower and get this move, test this low, or these late sellers are going to get trapped, and you're going to see a bounce back to value. That's 1212 right here. That's CV pot. So that's kind of extrapolating our silver roadmap onto this particular instrument. So I would mark this low, that high, find the midpoint, which is here, and now you have yourself your key range. Right now we're below the previous month's low, and 2 days we've closed back above it. We're now below that key range low. So this could turn into that on a very short-term basis, followed by the potential to see this at the very least. So that's something to watch out for. But again, one thing we talked about with silver was that it wasn't quite there yet. So here's SI. So here's SI. Here's the impulse range that you can see from that high, that low, that mid. Here it's below the key range low, but it's not there yet. So this one's still in the oven right now. And I mentioned that we could even go a little bit lower before we start to see it. Here's a key range low from over here. So we could drop down even lower and then start to see the move back up. But usually it needs to really find a strong rejection. I don't think it's done that just yet. So it might need another spike lower before it finds a good price to reject that. And then that's going to be your high quality target, followed by that level right there. So that's basically the same analysis for USLV. All right, let's take a look at some stocks. Well, you know what? I didn't do ES just yet. And this one had quite a day. This one very similar to what we talked about with regards to the NQ. It's the trend structure still up. The 2600 to 2605 zone is very, very important. This morning we noticed that price was rejecting highs. And to us, again, that usually implies a little bit more weakness here when you reject the high. The midpoints here didn't quite get there. But it did a pretty good job after its rejection up there. Overall, we could have a new key range up here from that low to that high. Again, I think down here would be a great opportunity to defend, and we could be looking at a new area to do business up here with an upward bias. So we'll keep that in mind when we start looking at some of these stocks. Okay, here's DE. All right. This one's been trending up very, very nicely. To begin the month, you see higher value already. And the first trading day of the month hit the top of the pivot range and bounced already. But it may not be done just yet. You can see that it's way, way a ways from the fast-moving average. And when it gets too far away, it may be overextended and it might be a reversion to mean trade coming, which means, you know, price has to revert back and then you see another defense back up. So I think the structure is well intact. You see a strong CLVN at 142, higher value relationship with the trigger zone coming into that same zone. I think overall this thing still has an upward path. Hard to tell where right now, from this view at least. It's looking pretty strong though. And you can see that, you know, we had a big strong sell-off here, bounce back to the mid. And again, that's about 20 handles there. And then if you go 20 handles up, it puts you right to where we currently are. So it's reached that target right there. And at some point, you got to slow down and build out and digest the recent price move. But again, that favors buying pullbacks every time. So a few thoughts there. I don't know if it's super actionable at the moment, but I do think if it were to pull back, it still offers a buy. Here's Apple. Apple, man. I don't know how, I know more people has endured what I endured in the last 2 weeks, but I don't see it much out. But when I updated my iMac to High Sierra, I got everything wiped off my drive. And so that's you know, I don't know what that means there, but I know others have had the same type of issue. Man, it's incredible. So taking a look at Apple with that in mind, market structure wise, it continues to hold above 165. You can see that this key range is still intact. It's still holding above the top of that key range and has yet to hit the 100% target. Overall, it's still bullish. I think 164 to 166 is still a zone that bulls want to defend. And with this failure to get a new high and we have lower lows, we might see another test down below. But that test might be defended yet again. If there's any failure to hold 164 or so, right, we got this 165 as the key range. If we fail to hold that level on the whole, then it's almost a giveaway that we come back to 157 with a high odds shot that we go back to 149 even. I don't think that's going to happen. It's just if 165 gives out and then price doesn't get back above, those are the levels to target. So we'll see what happens. I still think that any push into the zone is likely to be defended for rotations up. I think we're likely just building out in this range, so it's a fade the edges type of market. Fade new highs, fade new lows. That's a big move. All right, let's take a look at Autodesk. So right here, this was one that came up on the scan. This one took out the previous month's low. You can see here there's also been some lows down here before. Bit of a rejection tail that came out. Failed to hold below the previous month's low, popped up a little bit. We got a big gap up there. It's clear, you know, we kind of broke some market structure here. So the kind of the 120 level, 105, 106 level. We were in this kind of thing, popped up, and then big gap down on earnings, retraded back to the opposite end of the range. Usually, that will give you a bounce back to the midpoint up here back toward 120. Right now, closing the day, 107.95, 120 would be about 12 handles higher. But once it gets to 120, good odds that it comes right back down and stays within this market structure. So right now, this is a short-term opportunity that could be a push right back to 120. That could give you also a new key range as well. Let's see, CMG was one. Here you go. Now, we were talking about CMG. This is very similar to the market structure we were just talking about in the last one. And in the room last week, we were looking at CMG, and this is one that we've had a hard sell on it. Just every single time, it's just sell, sell, sell. This one can't get out of its own way. But things changed last week when price popped above 290. Price popped above 290, a gap up, was holding throughout the day, and I mentioned to the group, I said, look, we just broke market structure. We popped back up into this market structure. I said there's good odds that we hit 330. I said for the first time that I can remember, this is a buy opportunity that takes us from 290 to 330, but that's it. Because once it gets to 330, you're likely going to see it come back to 290. And then you're going to see bulls defend 290, and you may see 290 to 330 become the new price distribution for a while. And that might be enough juice to start trying to get it back above 350. But if there's a failure below 290, this thing makes another big dump lower. So that's the market structure where it's going to build off of 290 to 330. We talked about it last week in the room. It came to fruition today. It hit 330 right on the button and reversed hard, just like we thought it would. And now, if it pulls back to 290, which I think it has a good odds to do, which is still, 25 points lower, that could be another buying opportunity for a move back up. So this thing could be very, very nice. And again, I really like when an idea comes to fruition based off market structure, and I also like when you come out and rinse out the stops above recent highs, as it did here, and that makes for a pretty good rejection. So we could be looking at a short-term move lower followed by a reversal back up. Some of the ones I like to look at are like this DGX, where you have an impulse rally that happens. So strong low, it pops up, it holds the retest area right there, the midpoint, and then it blasts off for a big, strong impulse rally. Today, it threw off a huge candle, big candle right there, rejection tail. And so you have an impulse low, a strong low, impulse rally, strong high. That usually gives you high odds that you're going to come back to the midpoint of that range. So what I like to do is draw it off. So let's bring it up right here. So this low here, let's see, it's 931. We're going to use the fib extension tool there. The high is 102.62. And the midpoint's going to be 96.47. Somewhere right here. That's good enough. Okay, so right now we're trading 124. We have a good shot, high probability shot that we're going to get to 96.48. We're at 124. The other thing that I like to do is use the recent high to project what the average weekly and average monthly range would be to the downside. These are my monthly targets right here. So I'm going to make them bearish targets. And they're going to project from this high and downward. This is your 75% target. That's your 100%. That's your average range over the last 10 months from that high to that low would be an average move. That's your high probability target. That's between 96.11 and 97.74. So that tells you from this high, strong high, big rejection, high odds to reach this target, and it falls within what I call the high probability target zone based off of our PivotBoss ADR targets. We got a high target probability of this thing coming back to 96.48. What we want to see, first of all, we don't want any earnings or anything to kind of mess it up when there's nothing there. And number two, when price opens tomorrow, we don't want price to open above the midpoint. We don't want it to open above 101.12. We want it to open below. We want price to open maybe around the close here. Then we want it to see it retreat and reject off 101. And then you want to see it perhaps push back to lows. That would be ideal. So staying below 101.12 is ideal. If price closes above that level, the deal's off. If price opens above that level, the deal's off. Price can get above that level intraday, but it needs to reject. So again, that's the ideal, is 100. So say 101 can get you back to 96.48. That's a pretty good high probability move. And from there, now you have a key range to play off of for swing moves. let's see. I wanted to take a look at some Bitcoin also. So I'm going to share over here. I was taking a look at a chart right here. This is Bitcoin. Lots of great articles being written about Bitcoin. I've really enjoyed the discussion. I've really enjoyed the history of this one over time. It's been fantastic to follow. And of course, look at where we're at now. We talked about it before, and I mentioned that I've had various buy points, various targets. My first major buy was 17. Then it was 3,000 to 32.50. Then it was off of anything between 47.50 and 5,000. And the targets were, the major target was $6,000, and we also knew that I thought that 10K could be hit pretty quickly. Now, there's various wild targets now. I knew even at the time where I made 6 and 10K, that's where I thought prices could go based on market structure and volatility and the demand as it continues to increase heading into even CME offering futures. I think December 18th is going to be the first day they debut. There'll now be the ability for professional firms to come in and trade options off of them. So that's going to be big. I think it's going to push prices even higher. But the thing to always remember is market structure is the most important. And this one has maintained great market structure. This 5,200 level is just a major, major level. At some point, that level may be tested, maybe if you have some kind of major market event, but that's going to be a big level to defend at some point down the road. Right now, 8,000 is another major level here. You can see the market structure still remains very much intact, 8,800. And so all these key levels are very important. One thing that's very useful to us is our impulse moves. And the most recent trade right now, the most recent move, this is an hourly chart. This is an hourly chart, and you can see right here, that high is 11,457, and then this low right here is 9,000. So basically 9,000 to 11,500. And then you have a midpoint somewhere in this zone right here, just called 10.2-ish. Now you can use that to extrapolate higher and lower, right? You could use this to say, hey, I think based off of this impulse range right here, because it got the midpoint, if we break this thing to the upside, and look, the midpoint's been defended, a failure to hold below the low was the ultimate buy. This market abides by the same rules of everything else we use at PivotBoss, right, in our trading room. It's been fantastic. And so, again, it's all about managing risk here. But if you're one that's been heavily trading or looking to get into Bitcoin again, if you honor your normal risk rules, know how to manage trades, and know how to seek, stuck or track participants and those types of things like this key range offers, you'll do great, because look at this right here. Again, that's a high quality buy, and that was 8,800 to 11,800. A big move there, nearly $4,000. I mean, almost doubled just from there to there, or not doubled, 50%. That's huge. And so I think right now, based off of this, we could be looking at much bigger movement to the upside. If we take that 9,000 low right here, right? You take just 11.6, just call it to make it even. You go 7 up. 13.10. Is that a rough estimate? I mean, you got much, much more to the upside based off of just this. So just something to keep in mind here. This one's been working really nicely off of its market structure. I still believe that there's more upside. It's going to be interesting to see what happens December 18th. Again, this one has perhaps much more volatility and movement to come before some sort of significant bubble effect occurs. But in the meantime, there's still money to be made. So this one's been very nice in its movement. I'd mark this as the impulse range right there to get your key levels because it could play nicely off these key levels just in the next few days, let alone, you know, over the course of the month. Again, this move right here, this failure to hold below, you know, 88 or 9,000 here was a huge move right back toward almost 12 in just a several days time. There's plenty to be made right now. So just wanted to talk a little bit about Bitcoin as well. Does anyone have any last requests before we go ahead and call it a day? Venezuela crypto backed by oil. Yeah, that should be interesting indeed. Absolutely. I just find the entire space to be very, very interesting, emerging space, a huge disruptor. You're going to see a lot of different parts of the financial industry be disrupted because of something like this. Whether the cryptocurrencies themselves survive or not, you know, blockchain and those types of things, I think is going to be fundamentally a disruptor. But there's got to be at least one major significant crypto, and Bitcoin seems to fit it. So pretty interesting, and it's going to be interesting to see what happens when the CME comes out with those futures. So I'm going to be excited to see that and the options that come with it. All right, everyone. Well, again, thank you all very much for being patient with me as the site hit a crash last week. I know many of you were excited about the Cyber Monday deal. I got lots of emails about questions, and of course the site went down and folks weren't able to order and finish up there. So the deal's back on. The site's up 100%, back up to speed. You can see all offers valid now through December 10th. You can get deals on my book, Secrets of a Pivot Boss, the Pivot Boss Bootcamp there, the Swing Trade Pro. There's also tomorrow and Wednesday, you can get 10% off Pivot Boss merch with Mary17 as the coupon code. Lots of cool stuff here. Folks have already given me great feedback on it. We've gotten several pieces ourselves. My daughters have ordered. And incredible quality stuff. Really, really great stuff. Something for everybody, but good stuff, and I tried to price it very good, as much as I had control over. So, for example, some of these things are, you know, under 20 bucks for a t-shirt like this, which is pretty solid. So, check it out. But the Swing Trade Pro is back. Secrets of a Pivot Boss Bootcamp is back. SPB, all the trainings there, all the available downloads as well. A lot of great content, so check it out. And again, the deal's going to be on through December 10th. So be sure to take advantage. All right, everyone. Thanks a lot for being a part of today's monthly market outlook. Always great to have you in the house. And we'll be back at it again in the trading room tomorrow. Everyone have a fantastic rest of your day. Take care, and I'll see you soon.